Netflix announced a 10-to-1 stock split.
Shares of Coinbase right now trading up about $3.50 following the report. Probably Oscar in November. Also, Netflix traded to begin on a split-adjusted basis on November 17th.
That stock's going to be dead money forever now. Well, not forever. I think go into hibernation
In
for a
about
while.
18 minutes from now, earnings from Apple. Apple is expecting earnings of $1.76 or $1.77 adjusted. If they report that.
Oh, it's pouring out there.
EW, Edwards Life Sciences, reporting 67 cents. The estimate was 59 cents for Echo Whiskey. Sales of 1.553 billion. The estimate was 1.495 billion for Echo Whiskey EW. MSI, Motorola.
Motorola.
Acquired Silvus Technologies for $4.4 billion. That's Michael Sandy, India.
Oh man, I got a typhoon over there. What is it? Pouring.
USTR versus the US program China trade taxes report.
WDC, Western Digital. Western Digital reported $1.78. The estimate was $1.57. Revenue of $2.818 billion. The estimate was $2.715 billion for WDC.
EW announces CFO transition plan.
GDYN, Grid Dynamics, board authorizing a $50 million share buyback. That's Golf Delta Yankee November, GDYN.
Is Apple on yet?
Shares of Roku continuing to bounce off the lows now following their report. 94.40, still down about $6. INTC Intel in talks to acquire chip startup, AI chip startup Sambanova. That's from Bloomberg. That's INTC Intel.
Is there anything else? Yeah.
Intel shares bouncing here a bit off the lows. 40.50, up about 34 cents. That's INTC. FSLR First Solar. First Solar reported $4.24 in earnings. The estimate was $4.25. So that's a miss. Sales coming in above estimate for FSLR.
All right. Hold on a second here.
PLMR, Palomar
Okay.
Holdings, to acquire Gray Surety for $300 million. That's Papalima
This is like,
Michael Romeo, PLMR.
and I don't need this anymore. Okay. When's Apple? Apple's gonna release their numbers any minute now, right? So I guess I should wait on Apple. I'll give it another 5 minutes or so for Apple, and then I'll jump into it.
IR, Ingersoll Rand, reporting 86 cents. The estimate on Ingersoll Rand.
Oh, these cyclicals.
Members, keep in mind, we're operating on Apple and ATL, and it comes out around 4:30.
Was 68 cents, or actually 86 cents, in line with the adjusted number of 1.96 billion in revenue. The estimate was 1.949 billion. So that's in line earnings and a beat on revenue for IR, India Romeo.
Do we have let me see. Could I pull
Coming up in less than 10 minutes now at 4:30 p.m. Eastern Time, earnings from Apple. Apple is expecting $1.76 GAAP earnings for Q4.
Probably should have just started the recording after Apple. People are going to watch it on recording and have dead air for 10 minutes. You live and you learn.
MSTR Strategy reporting $8.42. The estimate was $7.90. Revenue of $128.69 million.
Any notable bearish flow out there? Bearish, bullish, there really isn't everything, like what definition of notable? I mean, if you're talking about like size flow, there's size call buying, size put buying on both sides.
Shares of Netflix
not reliable in my opinion.
Company announcing a 10
because it's hedging and stock replacing and everything else that goes on. But yeah, there's some protection out there. A lot of times when you're in a bullish environment like we are, they usually protect with the ETFs, with the major ETFs, sector ETFs. So far here, you got Amazon had a nice reaction to numbers. Netflix,
DJT, Trump Media.
Announced a 10-for-1 split.
JP Morgan for Trump Media Bank Records.
Roku was down off the number. Gilead, I think, was up then turned down. Down, Gilead off the number.
Shares of Trump Media right now up about 4 cents after hours.
4 whole cents?
At 15.36.
God bless America. Honestly, I don't. You guys want me to wait for Apple? I really couldn't care less. You guys know me with earnings. What's up, baby?
ZG Zilla Group reported 44 cents. That's a penny beat. Sales of 676 million is a beat for Zulu Golf.
What's the other? Oh, Zillow.
VOYA, Voya Financial, increased its common stock dividend 4.4% to 47 cents.
Where did these guys end up today? Meta closed what? Down 11%. Oracle too has been selling pretty violently. Woof! Oracle closed at the lows. We had such a crazy run though. I'm ooping, huffing and puffing. What was? No complaints, AB. No complaints. Every time my eyes open up in the morning, I'll take it. Yeah, I mean, I thought, initially I thought it was just perma bears, doing their thing, but started to get some circulation over the past few days with Oracle. Now waiting on the stock a bit. But these are crazy moves to begin with. So, no, I did not. What'd that do? I had a crazy move. They didn't report yet, right? Hims. They got earnings coming up here any day. Next week. What is all this mess on this chart? Let me get rid of this. Oh, no. That way. Remove drawings. There we go. Looks like you might have a downside niner in Hims. Where are my niners? Hold on. What's this on it? There we go. You got earnings next week in Hims. Oracle could be worth a poke. Yeah, honestly, I don't really play. I don't fool around with these names too much. Just in general, you know. And then once they do all this, you know, I'm kind of lost in space. I would say if at some point the sellers kind of die out here and you see some accumulation come in sweeper wise, if you're interested in the name. But yeah, the stock's up triple more than, right? Yeah, triple this year. So kind of goes on my ignore list.
Lumen Technologies reported a smaller loss than expected on the adjusted.
Yeah, no.
So,
What else went on today? Anything else?
2 minutes, Apple.
Price action wise, catch you guys' eye while we're waiting on freaking Apple.
Apple right now trading up about $2.
You know, usually I cancel this week of webinar. Because I know a lot of people like to talk about earnings. I really don't have much to share about, you know, earnings and stuff like that. I don't have much of an opinion. But I figured
Apple expecting $1.76.
it's a good time to get everybody kind of caught up to date here, what we've been discussing the last couple of weeks, because you got, you know, interesting shakeout. Not shakeout, interesting how things are settling out, I should say. That thing's still going higher? Oh my God. Come on. Are you kidding me? Wow. Wow. You know, and you can make the legit argument that this thing's not even expensive. It's just up a lot. You know, see, this is the difference, and we'll kind of talk about that between these names that are fundamentally driven. Yes, a lot of them have come too far too fast, but they're legitimate. There's legitimate growth there. You know what I mean? There's a reason why these stocks are acting like this for the most part, where, you know, a lot of those bubble names, there's nothing there. It's all story, you know? People hyping them up. They'll be the next WDC, the next NVIDIA. And meanwhile, there's nothing there right now. So there's nothing to really justify the run besides hype.
Apple reporting
Apple's out.
$1.85. The estimate was $1.76. Sales of $102.47 billion. The estimate was $122.17 billion. So that's a beat. iPhone revenue of $49.03 billion. America's revenue is $44.19 billion. Greater China revenue of $14.49 billion. Apple shares trading lower.
They're starting to figure out how they beat and the stock's lower.
Following that report. Again, beating on earnings and on sales.
Apple too has had a nice run going in, considering they've been a big laggard in this whole AI theme.
Apple at $265 right now, down about $6. OpenAI, Oracle, and Related Digital announced Stargate data center site in Michigan. That's ORCL.
No movement there. We got Apple down, Amazon up. Netflix announced a split. Yeah, Netflix is kind of on an island of its own because Netflix has been dead money for a while.
Apple shares are bouncing here.
You know what's interesting is after they split, usually these stocks go dead for a while. We'll see if that transpires that way again. All right, let's get into it. I already lost interest in the earnings. Excuse me. All right. Like I said, usually in this big week of earnings, I kind of cancel the webinar because everybody's just obsessed with earnings, and it's kind of, for me, it's the least important thing. Don't get me wrong, the reaction to earnings, how the price action lines up with some of the flow we may see post earnings, it's important. But there's a lot of mess, and just so even STEAMROOM members know before I dive into it, you get a name like let's say like the Metas of the world, the Apples of the world. They announce earnings, and just because they announce earnings doesn't mean the flow cleans up instantly, right? Because what you have is you have all this pre-earnings positioning ahead of the number, and then after they announce their numbers, all that stuff that was put on pre-earnings gets adjusted, right? So you got people possibly replacing protection if the stock is up because the protection is wiped out, or maybe they roll down strikes and calls if the stock is down, adjust position for a higher delta. So you got a lot of that going on in the bigger names, So this week in its entirety is just a really difficult week, as I've explained to you guys ad nauseum over the years. Like I said, a lot of times I just even cancel the webinar. But what I wanted to do is kind of just run through some of the things we were looking at the past 2 weeks, so you guys get an idea of where they stand. Because if you remember a couple of weeks ago, we discussed how, I was telling you guys how I felt it was an opportune time to kind of chill out, okay? Rein it in a little bit, right? We're coming off a solid few months, especially on the more speculative side, okay? Because there were things out there that were signaling to us, right, based off what we look at in the STEAMROOM on a day-to-day basis. They were signaling to us that there is elevated risk in individual names out there, and while the risk is higher because of earnings season and a few other things that we spoke about and we'll look at again today. Let me shut this guy up. The reward side of the equation as well was being chewed into because of how far things have come to the upside. Okay, and how much fuller positioning has become in a lot of the hot stuff out there, right? A lot of the stuff we've been playing and have made money with over the last few months. Okay, so that's kind of the stuff I want to just go over quickly with you guys so you get an idea of how all that stuff is settling in, where we're at now. And again, as we get into now next week, this is where we start to get that edge from the flow back. Not all at once, little by little. Now, don't get me wrong, there's still a ton of earnings out there. We still got to pay attention to the earnings dates every time a name catches sweeps, okay? But the past week or two, everything to me is an earnings play, okay? Because you got names like Apple and Meta and Amazon. All these names reporting will have an effect on anything in the market, especially tied to tech or AI or anything like that, right? So you see elevated hedging and protection in everything because of these couple weeks. But now, once we get into next week, that starts to dissipate. And all you got to worry about is name by name earnings flow, right? So the flow starts to clear up little by little. You start to see less flow out there, less action, less size, but it becomes cleaner action, right? More meaningful action. We could get a better read on things. All right, so that's the good news. This week was a menagerie. You had the heart of earnings season. You had Trump-China meeting, right? You get elevated hedging into that. You had the Fed, another big one. So you had a lot of stuff going on this week. So next week, undoubtedly, we should definitely see the flow start to clean up on our end, okay? And I feel that's important. So because that was the main reason. We had no edge out of the flow. And on top of that, we were seeing things that were making us feel a bit uneasy about trading names. Okay. And if you recall, about a couple of weeks ago, I mentioned to you guys, and you guys know it's a big change for me because you guys know I love names. We discussed how we were probably better off trading the actual indexes via ETFs or futures, whatever it is you do, right? So looking for opportunities in the indexes and ETFs or off dips, then trading single names because of how difficult and how much risk was at the single name level. Okay, so that's where we've been at as a whole signal wise, and I just want to get everybody caught up to kind of how some of that has settled in. Okay, I kind of went all over the place posting this stuff, so I get everything here. But let me start with this. Right, let's rewind a couple weeks. The main thing that was kind of rubbing me uneasy, and a lot of you folks would have agreed, while the market as a whole was fine, right? We're not seeing euphoria. We're not seeing this rush into equities as a whole, right? We talked about how hedge funds are still net neutral as a whole. But what we were seeing were bubble and blow off top signs in some of these speculative bubble type names, right? We went over all those names. We started to see a lot of similarities that we were seeing back in 2021. If you remember, we had that discussion. Okay, so we came to the conclusion that at the least, maybe it's not a major top like it was back in 2021. Maybe it is. Okay, but at the least, sooner than later, there's going to have to be some legit digestion there, if not a correction. Okay, and the reason that was a problem for us, especially in the steam room, a lot of us, that's where all the money has been made, right? All of us in the steam room who have been trading successfully over the past couple of months have all been trading these names, okay? And they've been incredible. So now, again, 2 weeks ago, the discussion was how we have to be aware of the risks that are out there now and be really careful. And now the priority becomes keeping the money we made as opposed to making more money. Okay, right? Just kind of reviewing where we were at. And the good news has been that since then, right, since that discussion, we've seen a decent correction across the board in a lot of these bubble names. Okay, some more than others. Right? They don't all come down the same, but we've seen a decent correction. Like, I'll give you an example. Even the rare earth names that I was getting rebutted left and right about talking about these rare earth names being overextended and ridiculously priced. But you look, even some of the better names there, right? Kind of like the leader of the bunch, MP, basically gave back the whole run it had over the past couple of weeks. All right. What are some of the others? I don't even know some of those funky symbols like TMQs and NB. This is one I traded. Right. So they all kind of gave back this kind of little blow off move here. All right. Even in the rare earths where, a lot of people felt there was still a lot more upside there based off the backdrop with Trump and stuff like that. Okay, that needed to happen. Okay, because again, it was just that last move that got us concerned was your definition, what you usually see in a blow off top, right? Nobody thinks they're going to run out of gas, tons of volume coming in. It's always at its easiest. Everything goes higher. Everyone's looking for the next name that does the same thing, right? And doesn't even care about the fundamentals or anything, just as long as they do the same thing. Those are all signs that you're getting close to some sort of top, some sort of high, right? Again, we talked about all that. And even some of the names that people are really bullish on, they've come in, not as much as some of the others, but they've come in some, right? We talked like even an Oklo, which kind of, I mean, this thing's been crazy for a while, not even just recently. Irene, which actually has some fundamentals to it, which is a rarity in this arena, right? But across the board, at the least, okay, they all cool down, the flow cooled down. Anybody who was chasing into those highs via calls got burnt, okay? And that's what needed to happen. Now, the problem is when it gets that bullish, okay, when you get kind of those blow off top signals, it usually doesn't end here, right? In other words, this is not enough of a price to pay for what happened into those highs. Okay, like I mentioned to you back in 2021, all the spec names, the SPAC names, all those type of names went into digestive mode. Okay, they didn't crash, and people got to realize that they don't need to crash. In other words, this doesn't have to come straight down to $12. They rarely do because they don't make it easy for the shorts either, right? What you get a lot of times is digestion here after a correction while other parts of the market are still working out, right? So people think there's still an opportunity here because they're seeing other parts of the market still finding success, but they can't make any headway. And at the same time, the shorts can't make any money shorting them because they're not going lower either, right? So you get a period of digestion before they finally crack and correct further, right? That's kind of what happened in 2021. Now, again, I'm being honest. I don't know, again, I don't know how anybody knows if we're officially there, but I don't know for sure if we're there, right? If this was a major high, you had all the same signs of any blow off top that you usually see. That I know. But at the same time, it wouldn't shock me if these things digested, consolidated a bit, and then had another rip. You know what I'm saying? But again, I don't know. I really don't know. Okay. And I feel there's still way too much risk based on how much these things are up and how many people plowed into these things on the long side. There's way too much risk for me to even try to figure that out and take stabs on the long side. So what I would recommend if anybody asked me for my advice regarding any of these things, and if you remember, this was kind of my thought even a couple of weeks ago, trades. I would just use these as trades. So in other words, if this Irene is dancing around here and consolidating, and we do see a wave of cleaner sweeper activity come in on a down day at the lower end of the range, and you like it for a bounce, you could get a pretty healthy bounce out of this name, even if it's in consolidation. But I wouldn't treat it as if this is coming again. I think that's the most important part, right? And there's no, in other words, well, what if this happens then? Is it coming to life again? Because a lot of times, sometimes you'll see these things break out to new highs and then reverse after they catch everybody. So these things still have a ton of risk, in my opinion, in them, even with this consolidation, right? And now, again, to make it more difficult, we're in earnings season here. So, each and every name is not going to report the same type of quarter and earnings. Some are going to have numbers people get excited about. Some are going to disappoint. Some might be just flat, right? But to me, that doesn't take any of the risk away. It adds even more risk. Like, I give you an example. Somebody just mentioned it. I'm glad you mentioned it. BE, okay? They actually had a good quarter, a quarter that everybody got excited about. All right? Does that change my opinion about a BE up here? Absolutely not. Right? As a matter of fact, I think there's even more risk up here because of this gap up off earnings. right? Because if air continues to come out of it, if risk appetite continues to wane, okay, these things, they leak. They don't pour out, they leak, right? And again, just an example so you guys, they don't play out the same, but I like to look at past cycles because you get an idea of different ways things can play out because they never play out the same, right? But back in 2021, like look what happened to GameStop, okay? You had a parabolic move. It gave back the parabolic move and then revved up again, looking like it was going to make another move to highs. And then was a dead heartbeat after that. You understand? But to me, the takeaway was here, the risk to me didn't change here. You understand? No matter what it was doing, these things still incurred a ton of risk because of what went into this. Right? So if you have faith in your trading skills, if you have faith in the type of sweeper activity you may be seeing on that day at a spot you may really like, right? In other words, maybe the stock's down at the lower end of the range. That's what I mean by spot. I would look to trade them, but I'd be really nimble. I'd be really quick, and I wouldn't fall in love regardless because of the risk that's there. Okay? Again, to me, none of that changes here because of how strong and how ridiculous the buying and the move was on the way up. Okay? So just going over what we were talking about a couple of weeks ago and what has transpired here. So based off what we were seeing in these bubble names, what we needed to see is these things cool off and money go elsewhere. Right? If you remember that discussion. For the market not to pull back, okay, money comes out of high areas and goes into new areas. Okay, and that's exactly what we saw over the last couple of weeks. What we saw was money come out of these names that were leading. This was where all the momentum was. This is where all the big percentage gains came from. And they started to move into some of the larger cap names, the mega cap names, specifically even the semis. Okay? So while that's constructive and it actually helps the indexes because a lot of these names make up the indexes, the problem was that these names are already over-owned. You understand? The semis, it's not like the small caps when they were first being bought, these micro cap names where everybody was short and nobody owned them, right? These semis have been the heart of the AI trade. They've gone through periods of consolidation where they go from over-owned to a little less owned, okay? But after they see rotation for a couple of weeks, right, everybody plowing back into them, they get overextended and over-owned. And that's where we are now, right? And again, you see some of the names out there. Even the big one, NVIDIA, has moved recently, right? Which has been dead money. AMD went bonkers, right? QCOM had news, went bonkers. Even Intel has participated. So the semis over the last few weeks have been the hot area where a lot of the hot money has come out of those bubble stocks and into the semis, okay? But again, the problem is now, talking about now, because it does us no good talking about the past anymore in these things. These things are pretty much, in other words, risk-wise, they're pretty much where the bubble stocks were a couple of weeks ago when we were talking about it. Right? And again, there's a lot of common sense here. You don't need to look at positioning or have experience in watching price action to understand that a lot of these names are overextended. Can they continue to go higher? Of course they can. But as they continue to go higher, there's more risk of digestion and a drawdown. Right? And being that we're in earnings season, you run the risk of any little hiccup in the space could be a real problem. Okay? And this is basically at the heart of the issues we have in names right now. Okay? The stuff that is set up, as we discussed, okay, is a lot of the pockets of the market, the names of the market that nobody has wanted to have anything to do with, right? A lot of the cyclical names, a lot of the economically sensitive names, that's the part of this market that is set up right now. That's the part of the market that's holding sentiment from becoming euphoric to basically being a little above neutral. Because that part of the market is under-owned. Nobody's in it. Now, the problem is still to this day, nobody wants to be in it. And now what you had Powell, he cut rates, but he was a little bit hawkish about the December cut, right? So they continue to sell those names, right? Even worse, no aggressive buying showed up in those names, right? So while everybody's talking about rate cuts, the anticipation of rate cuts driving this market, the names that should benefit off rate cuts have been going south, right? They haven't participated in any of this rally. So we're coming out, a lot of these names report early, right? Early in the earnings season. So they've already reported numbers. And the good thing about that is we're going to get to see any post-earnings flow if it ever shows up. But the big problem is it hasn't showed up. And still to this day, it doesn't show up. All right? But going back on our prior discussion, that's basically, in a nutshell, what we face in this market, right? You got pockets of the market. Remember, we talked about like 3-4 different markets. You got pockets of this market that they flip back and forth on, right? They go into this, they get overextended, they go back into that, right? While they leave a big portion of this market left behind with no interest. And to me, that has to change for there to be a runway, or for it to even be worth our while to build position in equities again, to tell you the truth. I know that sounds drastic, but at least that's my feeling, right? Because the problem we're going to face is every time these things see rotation again, after a week of ripping and call buying, they're going to be overextended and risk of a pullback or digestion, right? So let's look at some of the things here where we're at now so you guys get an idea of where we stand, okay? Coming into today, because of this rush into the semis and some of the more well-known names that make up the indexes, a lot of the short-term sentiment out there, which has kind of been favorable recently because of the lack of breadth, got a little overheated. And that's what you're seeing here, right? So when you see some of these shorter term signals light up red, you run the risk of a quick rinse in the market, a pullback in the market, right? And that's kind of where we're at least coming into today, based off this aggressive buying in larger cap tech that we've seen, okay? The good news is outside of these extreme short-term signals, right, these more tactical signals, a lot of the other positioning indicators we look at are still in pretty good shape. Okay, this is the short-term sentiment comp, which again it's labeled short-term, but it's longer term in time frame than some of the other more tactical signals we look at. While we're seeing heat on the shorter-term signals, this is still dancing around neutral, right? And what it tells us is that while we may be a little overextended on the extreme short term, that once we get some selling, all right, once you get a couple days of selling in the indexes, because of the lack of participation, there's a high probability that you're going to see money start to rotate into different areas. Then the indexes continue to sell, right? And that's kind of what we're seeing. Every time there's a little bit of selling in the market, it really doesn't gain much traction because they always find something to move into, right? You saw even a little bit today where the markets were trying to sell this morning, but every time they tried to sell, money was moving back into the banks, which have done nothing, right? Because they haven't participated. So a lot of the things we look at are still signaling to us that there's a high probability of a continuation of that. Okay, and the lack of participation has a lot to do with it. Again, this is just a SPY chart because of that rotation into the more heavily weighted names that make up the indexes. You ran into, potential exhaustion signals, as we've discussed on this webinar, right? If you look prior, we ran into an upside niner here. You had kind of just choppy digestion and then a little tug. Here, the next day, you got a rinse. That was it. And then here, earlier this week, upside niner, and you get a couple days of a little bit of selling, right? That's basically what we've seen throughout this rally since the Liberation Day lows. Every time you get a little bit of selling or digestion, they find a part of the market that they can rotate back into. Okay? And again, I'm not seeing anything out there that's signaling that we should see anything different, is what I'm getting at. This is the correlation, those correlation indicators. Now, they were a big signal of how there's a lot more risk in individual names, right? I'm not going to go deep into the makeup of these correlation indicators and what they mean. You guys know by now. But when these indicators get to extreme low levels, okay, there's a higher probability of a pop in volatility, one. And two, more importantly, you run the risk where the indexes may be up and whatever stock you're in not participating, right? The price action's been a mess because of this, okay? And again, you want to think of everything we do through the lens of a risk reward in this game, okay? When correlation has spiked and is coming down from higher levels, okay, that means you got a tailwind at your back. For every 4 names that you're looking to buy, if the indexes go up from there, 3.5 of the 4 are going to move up with it. Now, we're on the opposite side. Okay? If the indexes move up over the next couple of days, 1 out of those 4 names that you're looking at possibly go up. So why would we want to be as aggressive in an environment where we have that huge tailwind and be the same, just as aggressive now into an environment where there's nowhere near that tailwind, right? And that's basically all we're saying here. Here's another look at correlation. This is a 1 year. The other one was 1 month. It could get worse. It could get worse. But the problem is, again, if it gets worse, it doesn't make the risk go away. It makes the risk a bigger problem of a drawdown, as you can see here, right? Or even here. Okay? It doesn't alleviate the risk of a spike in correlation, which means a spike in volatility with it. So this is still a major problem for us as stock pickers. And this is a perfect segue into this, okay? Because when you see this, this is what internals are going to likely look like on a day-to-day basis. Okay? Some things are oversold, some things are overbought, some things have no interest. Right? You get a lot of randomness and sporadic, isolated price action. No fun. This is showing the Mag 70, all right? So you're seeing, as we usually see, you go into earnings season and they like to buy the popular names, right? I mean, why not? It makes sense. Mag 7, that's where predominantly all the earnings are coming from, right? But again, the problem is in these Mag 7 names, everybody owns them already. Everybody owns them. So you get a little bit of buying in them. Maybe they have a strong week or two, and then they're already overowned. Who's left to buy them? You understand? And that's kind of what we're seeing even this earnings season, right? You run the risk. You got Meta, they're overspending, even though their numbers are higher. It spooks an overcrowded population in the stock. Stock goes down. So again, you understand the risk of buying these things when everybody's buying them, especially into earnings. Right? Any little excuse to spook folks into selling, you're going to see decent selling. The semis we went over. This is kind of what the semis look like now on the daily. After going, they got obviously overheated here. Nice rally, right? After lengthy consolidation, you had a little more consolidation here. This leg could use some digestion again, right? And that's kind of where we're at now in the semis. All right. This is part of the positive out there. This is why I don't think the major market as a whole is at risk of any calamity yet. Because while you have overcrowded areas and you have bubble type names in spec land, okay, you still, like we talked about at the start, you have a lot of this market that has been neglected and underowned. Okay, and that's why you see positioning indicators, this one from Goldman specifically, that's at dead neutral in this. Okay, one big problem, though, for me that has me feeling cautious no matter what is going on is that the government shutdown, by the way, the government's still shut down, even though nobody seems to care about it. We're not getting any data from CFTC. So we're not getting any updates on positioning in equity index futures at all. And that was a big part of what had us feel bullish, even though the indexes have come a long way from those Liberation Day lows, is that you still had hedge funds short the S&P 500 futures. You still had the Russell 2000 futures aggressively short into this rally. I have no idea where any of that stands right now. None of it. Nobody does. And at this rate, we may not get this data until Christmas. So that doesn't make me feel good, to state the obvious, right? Like, the Russell 2000 futures, I don't know if they're still short or not. I have no idea. VIX futures, remember they were short VIX futures? I don't know what's going on there. I have no idea. So this is still a problem. This is big picture, okay? And the reason why this is important to me is you had a little one-day scare in the banking sector, regional banks, liquidity, right? Talk about credit and stuff like that. You always get concerned when these things sprout up, right? I think Jamie Dimon made a remark: when you see one cockroach, you find others. Okay, for me, I'm not going to take Jamie Dimon's cockroach analogy and use that as a signal. I look to some of these credit market signals to tell me if they are concerned about any issue. And like we discussed the last time we met, there is no concern in the credit markets right now about that type of issue, right? This is move. So think of the VIX of credit. And as you can see, this thing's been leaking, right? So risk coming out of those markets. Even that little regional banking scare did nothing for this. All right. So again, why is that important? It's important to acknowledge because, again, as tricky as it may be at certain times in certain names, and it's nowhere near as easy as it was, for sure, in names, okay? Anytime there's weakness in the indexes, we should still look at that as an opportunity on the long side, even if it means playing the indexes. There is there is no major concern or major cracks out there that the credit market is worried about. All right. There are people who are worried about certain things, but until the credit market starts to worry, it doesn't matter. Where am I? Oh, liquidity. I mentioned to you guys, again, this has a big impact on those bubble stocks and speculative appetite, right? The people that I follow in the liquidity camp have been concerned about liquidity currently. Okay. Their concern is more of liquidity is not as abundant as it was for most of this rally. And there could actually be problems that surface if the Fed doesn't react accordingly. Okay, I mentioned to you kind of what they were looking for. We're not seeing any major cracks in the liquidity camp yet. Okay, but I guess the best way to put it, you're seeing sluggish behavior, right? You're not seeing that same tailwind that we were kind of seeing throughout this whole run. And, you know, look at Bitcoin, right? Look at Bitcoin. Now, why is this important? Okay, it's important because, again, the names that we've been playing and finding success in, they fuel off this stuff, right? When liquidity is tight, like in 2022, which resulted in a bear market, you can have the sexiest story alive for a $2 stock. Nobody cares. That thing's not catching a bid. When financial conditions tighten up and liquidity tightens up, nobody cares about a $2 stock with zero revenue. But when you have liquidity look like this, all of a sudden you give anybody a sexy story with a ticker and they're buying. All right. So what we saw in 2021, in spring of 2021, we saw that blow off top in price action, and we started to see liquidity start to leak. Okay, so think of it as gasoline for that speculative risk appetite, right? Bitcoin and a lot of those speculative names went into hibernation. The indexes continued higher through the summer into the end of the year. The speculative assets did not. Okay, so that's why it's important to keep tabs on these things. So while we saw blow off top type price action in a lot of these speculative bubble areas, okay, liquidity at the same time has been dormant. What it does from here, right? You start to see liquidity crack and roll over. That's not going to be a good sign for those speculative areas of the market. This you could put in the constructive bullish column. This is hedge funds as a whole, net exposure, which we look at every Thursday. And you could see they're in the minus, they're on the minus side of this indicator still. All right, so net hedge funds as a whole in equities are not even net long, according to some indicators. Now, they're more long in certain areas of the equity market than others, but as a whole, they're not aggressively long at all. And again, the reason why is a lot of these macro funds that would buy these cyclical type names are not buying them. Now, a lot of people think that is going to change. I'm one of them, right? If the Fed does start cutting rates and you get into 2026 and some of this Trump fiscal juice starts to enter the system, maybe that'll light the match for these macro funds to get busy and start buying some of these things because they're not in them now, but that hasn't happened yet. And CTAs, I just wanted to bring an update to you guys because I know you hear about it a lot on social media too. This is from Citi, basically showing you the levels where these triggers, where CTAs would become a problem. And right now we're not really anywhere near a threshold that these things would become an issue. This was coming into this week. So you can see here, they start reducing longs, ES 6600. Okay, let's put some lines here so you can get a mental picture here. Whoop. $6,600, let's call it, right? Okay, that's where they start reducing their long exposure, okay? Because they're pretty much max long right now. They've been sitting max long for a while. Where they flip short, that's a bigger number, okay? Because that's an aggressive move. They're taking down all their long exposure, and now they start aggressively putting on short exposure. That's down at 63.50. So let's put another line there, 63.50. Bink. And can we make that red? Oh, yeah, we could. All right. So these are some of the key areas here. Again, according this is to the Citi's model, Goldman, McElliott, they all got different models. They're around the same area. All right. But this is kind of where CTAs would be a problem. All right. And usually, for these to trigger, it would take an event. Right? Some exogenous event, some catalyst nobody is aware of that enters the fold. What the more likely scenario is that as these markets grind higher or chop around and the upside slows down in a sense, these levels start to creep higher, right? So you remember we talked about this. You get kind of, and then eventually they start to get clipped. You don't really get, whoop, unless you get a shock. Oh, my levels. Oh, you get the picture. Okay. So I wanted to just throw CTAs in there so you get an update. And this is from Goldman. This is hedge fund positioning over the past week and month. And what you really need to look at is here. Single stocks, that's what they've done over the past week and month. Macro products, think ETFs and stuff like that. This is what they've done. So they've done a whole lot of nothing. They've done a whole lot of nothing. And this is just the past week and month. You go further back and they really haven't done much for a while. All right. So to put a bow on things here, right? Again, going back to our conversation in the last couple of weeks, there's still a lot of risk out there in single names where for me anyway, everybody's different. For me, I don't have the desire, right? Especially coming off the last few months, to stick my neck out in any sort of aggressive way right now because of all the risk and less reward that's out there. A lot of times, just to even amuse myself, I look at, some of the stuff I would have played that I didn't play because of that lack of desire, right? And, I would have done okay on one. I would have lost money on the other. The other one didn't do anything. Usually I'm not missing much. Just aggravation and stress that I didn't need. The beauty about trading your own account, if you're not trading any client account, is you can do nothing when the signals are telling you to not do much. You got nobody breathing down your neck for performance, right? You don't have clients telling you they want action. When you're trading your own account, you have the luxury of doing these things. And that's basically, to me, in simple terms, what kind of all this that we've been talking about the last couple of weeks mean to me. When does it clear up? Again, I don't know. I wish it would clear up tomorrow. Right? I don't know. You just got so many different things that are an issue right now, that the only thing that really will resolve all of these things at once is a healthy rinse. But the problem is that the market as a whole is not set up for a healthy rinse. You understand? Usually you see a lot of these things we look at, like earlier this year. Okay? Earlier this year, everything we look at that we don't like right now was there earlier this year, but at the same time, so was everything else telling us that there was a higher probability of a rinse coming. So it was certainly worth waiting in cash and not doing anything, because there was a high probability of a rinse coming because of all these other signals. The market was overowned. You had all these caution signals flare up. And then in a couple of weeks, or however long it was, little negative news, and it took down everything. It's different now. It's different now because you have parts of the market right now that are not being treated the same way as other parts. And because of that dispersion, you don't have offside positioning in enough areas. That's basically what I'm getting at. Okay? What would be the best case scenario out of this? The best case scenario out of this is you come out of earnings season and the neglected part of the market that I keep referring to starts to get attention and gain interest. That would be the ideal scenario. Because while money rotates into those areas of the market, it will allow all the crowded areas of the market, the overheated areas of the market, to digest. They don't have to crash and burn. They just need to digest. They need to wear out longs. And this market can be misleading. You see it, right? It cracks me up because you got people all day long coming on CNBC. Oh, this market's bullish. We're gonna melt up into the end of the year. Nobody owns anything. You're gonna get the Santa Claus rally, chase for performance. That all sounds great, but you can't buy everything and treat it like that. As you can see, you get hit over the head. Right? Somebody could take those comments and say, oh, wow, really? Let me buy these spec names. They got more upside. And then they get lumped up and chopped in half over the past 2 weeks. So to me, that's why it's important to pay attention to the things we pay attention to. Right? You can ignore them and it's going to cost you regardless. Or you can pay attention, acknowledge them, and try to figure out a plan around it. Why is this different from 96 to 2001? 96 to 2001? Well, that's you're talking about 5-year span. Why is what different? Why is the past 5 months different than 5 years? Like, what do you mean? What are you comparing? I don't know what you're comparing exactly. If you're saying, well, how is this different than the tech bubble of 99? There's a lot of differences. You know, there are a lot of differences. Yeah, well, there are a lot of differences. You know, there are a lot of differences. But what year do you think we're in that span? You know what I mean? Like, you think this is what, year 2, or are we in 2000? You understand? Like, and you got to understand something too. No matter what the answer to that question I just gave you is, okay, I tell you guys that this time and time again. In 99, okay, let's take even 98, 99. People think of 98, 99 as this incredible run, which it was. Easy money, cakewalk. The corrections that you had to sit through from 98 to the top in 2000 were worse than any correction you've seen in this market of recent. The Asian contagion in 98, you would have people jumping off roofs if we experienced something like that. So that's the difficulty of it. People thought 98 was the high when we had that correction. And they thought that's it, the bubble burst. Only for 99 to show up in the biggest blow-off run you've ever seen. You know, so nobody knows these things. Nobody knows these things. You know, but the problem becomes, and here's the thing, right? It all comes down to FOMO. In my opinion, if you've participated in this rally from the April lows, in this tape right now, you shouldn't have FOMO. You shouldn't have any FOMO. None. Now, if you miss the rally, of course you're going to have FOMO. And there are people and funds that miss the rally. And they're forced to chase these things, right? And they're not trading their own accounts. They're trading client accounts. So they have to chase these things. But that doesn't mean they're not going to have to pay the price for doing so. You know? Yeah, it's nothing's ever that's what I crack up about. Like, and I get it, you know, the CNBC, all that stuff. Yeah, they gotta gas things up, but they make things sound so easy, right? When all these smaller speculative names were starting to heat up and we're seeing flow all over the place, you didn't hear a peep about it from any of these areas, you know? Or because why? Because the Max 7 names were underperforming. The semis were in consolidation. You know, then all these things go nuts. And now everyone's like, oh, yeah, year-end rally, chase everything, chase for performance. But the truth of the matter is, under the hood, okay, it's nowhere near that, right? Under the hood, while things at the index level look super bullish, you look at a chart of SPY, it looks like everything's going parabolic. You got areas of the market that you could have been losing money in. You know, you could have been losing money in. So now you got an extreme again, right? You have where all these AI names, everyone's chasing these names because they're the ones going higher. They're the ones that have momentum. Right? Eventually, these things are going to top out. They're going to go into some digestion, and the money's going to go elsewhere. And all the chasers are going to be left holding the bag there, right? With options, it's just as good as a crash. Pop will get the job done. So I think the main thing, to not complicate things, right? The main takeaway from everything we've talked about over the last couple of weeks, okay, is to acknowledge that no matter what the indexes are doing, price action was, because it's not telling us anything. No matter what the indexes are doing, the way we were trading over the past few months, including myself, sloppy, chasing, buy everything, you can't do that right now because you're going to lose money. You can't do that now. You know? And again, the type of names we were playing back then, right? All these speculative names, don't even look at them. We don't even know. I didn't even know the company name, let alone what they did. But that's where all the momentum was, you know? Now it's like, you know, even names that I'm interested in. You know, I see a $5 stock seeing some flow. Yeah. A month or two ago, I'm buying it like this. You know, I'm putting on a piece. Now these speculative names, I'm trying to stay away from them. You know, for now at least. Yeah, we're all greedy bastards. I get it. We're all greedy. But that's what I'm saying, Struck. And the truth of the matter, I know, like we say it, you know, facetiously too at the same time. I still think it's worth looking for opportunities to try to make money, right? Because of everything we just went over. I still think there are opportunities out there to make money, right? Over the last couple of weeks, maybe less so because of earnings and everything we had to deal with, okay? But I'm saying going forward, it's just, you know, it's going to be different. You know, it's not going to be as easy. So while it's okay to still play and still look for opportunities, you don't want to treat it the same way. You've heard me say this, you can't treat this game the same way each day, each week, each month. You will get your ass handed to you. You can't. There are times to be aggressive. There are times to rein it in. There are times, in my opinion, to sit in cash and do absolutely nothing. You know, if you don't have that frame of mind, you don't have some sort of plan, the end of that story is going to always end the same. You giving back everything you made. Always going to be the same result, no matter how much money you make. It's tougher. It's just a tougher environment. Well, unfortunately, what are you going to do? Good times don't last forever. It's a tougher environment. You know, we'll get a more accommodative environment again. It's not like it's never going to come back. Just right now, we're in a tougher environment. We're in a tougher environment. So that's the main premise. I mean, anybody have any questions regarding any of this? You know, and you guys probably know. I mean, think about, and if you're honest with yourselves, you know, what names you would have played over the last couple of weeks, you know, or did play. Right? What names you own, what names, you know, you thought were going to act one way and they didn't. You know, and you'll see. You don't have to take my word for it. What would make you change your bias? A rinse is the easiest solution. Okay, so what I mean, why is it an easy solution? Because here's what happens, right? You get a drawdown. And what a drawdown does, it takes correlation up. So everything comes down, basically. Right? Everything is coming down with the indexes. So you're washing out everything across the board. Okay? And now, because already to begin with as a whole, sentiment is not all that bullish, okay? You don't really need a whole lot to get everybody lined up bearish again. You know, it's not like you're starting from one extreme and going to the other, like early this year. That's what we had to do early this year. Basically, you had everything at one extreme, and by the April lows, it was at the other extreme. Here, you don't have that high of a starting point as a whole in this market. So you get a rinse, you shake out these bubbly parts of the market, and at the same time, the stuff that's already been neglected gets shaken out a bit further. And then you got at least the starting point with some room to maneuver. You understand? So what I'm trying to put into words. What I mean by that is this. Okay? Let's say you get a pop to here, right? VIX pops, correlation pops, and it stops there, right? The unwind of that, after we bottom out, after that rinse, after that shakeout occurs, okay, the unwind of that, the tailwind it creates, is going to last for a couple months. The problem we face now is every time we get a little pop in VIX and correlation, we don't have any leg room before we're right back to where we were risk-wise. We got no wiggle room, I guess is what I'm trying to say. We have no wiggle room. Yeah, I think somebody else bought FCX. I mean, that's a tough stock. But listen, if you can hold your nose, you know what I mean? If you could not get frustrated with it, you might get lucky and make some decent money with it if you're patient. Yeah. But T brings up FCX. We saw a little bit of flow come in this week. Again, this is a leader in that copper space, right? So this is one of the areas, because copper, right, Dr. Copper, it's cyclical tied to the economy, that really hasn't done a whole lot here. And if the Fed's going to cut rates, right, the economy starts to show some growth again, even copper becoming an AI play, there's upside there. So you've got potential upside catalyst here. The problem is waiting for that, right? The aggravation you go through in a name like this. See, the beauty is when these areas of the market come to life, you're going to see FCX is going to be probably a leader, but there are going to be other names, other copper names, right, that come along for the ride. So kind of what we saw in the industrial space, in the utility space, right? You see how some of these areas, they became AI plays, right? You get some of the big utility names, the big industrial names, and then you get some of the lesser known names that nobody owns, and they start catching flow, right? And you got no sellers in these things when you get institutions starting to buy them. So you get cleaner moves. Oh, but again, there are a lot of things, right? We talk even the leaders themselves have been just look at Home Depot, right? The home builders, nothing. Zippo. And I'm not even a big fan of trading these leaders, right? You guys know I like to trade the underbelly of this. The underbelly of these names. But yeah, these are the areas of the market that are on their own. But he brings up a good point. FCX, we saw a little bit of buying this week. I think it was December or Jan buying. And maybe this is one of the areas that sprouts up as we come out of earnings season. Yeah, CAT is an AI play. Exactly. Well said. Right? So that's what you start to see. Right? You start to see the tentacles of AI spread out into these other areas of the market. Look at this move. My goodness. So I can't blame UT for having an interest in Freeport. It's just you know it's not, at least initially, going to be a smooth trip, you know? I remember, where was it Catch and Flow? Here? I think Brahma in the room bought it. I think it was Catch and Flow here. Had a nice little run, and then this happened. And then had a nice run after. It's just you pull your hair out of your head with this thing. But I see it. I definitely I can't talk you out of that. Report definitely makes sense to me. What else? STCO been the copper name go. Is it really? Oh wow, Southern Copper. I know Southern Copper. Oh wow. Interesting. Interesting. Yeah. So, hope again, I'm not even saying these names. These are usually the names when you see rotation from sector to sector, they play these names. Right? We kind of want to see the underbelly of these spaces. Like what? Like the flow we've been seeing in everything else. That's usually where you see these big winners. They don't have to be new names. They could be names that have been around forever. It's just now there's a re-rating going on in the group. Take like this name here. This is the poster child for it, right? VST. Natural gas utility name. Right? Who would have thought this thing ends up being a growth name? My gut, again, I'm disclosing this for a reason because my gut means nothing. My gut is as wrong as your gut and everybody else's gut. My gut tells me that at some point these, like the Freeports, the copper, they're going to be tied to AI. They're going to have to get re-rated. The build out of AI. Just like energy, you need energy for the data centers and AI. You're going to need a shitload of copper, no? So, how long that takes to play out, and that's a whole other story. You know what I mean? Obviously, that's the more important question. But if you're willing to be patient with it, like a Freeport, you could get lucky. You could get lucky there. And it doesn't have to be Freeport. It could be any copper name you like. Tech, what's that? That's zinc, right? Zinc, I think. It's a yield. I'd be on here. Tech is zinc, I think, right? More data centers, more copper demand. Yeah, exactly. So and that's what I think could be a huge boost for the rest of this market, right? So think of this, right? And this is the optimistic view. Okay, maybe it's in 2026. Again, the timing, who knows? But the optimistic view is that you get a Fed that's now starting to cut rates. Okay, you get all this Trump fiscal, that package, the tax thing, everything he does starts to get into play. The economy starts to see some growth, right? Maybe the housing market starts to improve, okay? And the cherry on top is this AI build out, like you guys are pointing out, has a need for all of this on top of it all, right? You can make the case for these things to go on a pretty healthy run. Because, again, nobody owns these things. You know what I mean? Nobody owns it. It's not like everybody's positioned for it. Nobody's in that. Nobody's in these spaces. Yeah, you see, like the rare earths, right? I mean, there was one guy who was telling Show and Seal. I forgot where he is. He's on Twitter or something. He just got lucky, and the rare earths, he thought was going to be a big thing, loaded up on a few of them in his IRA and hit big, So you need a little luck, too. You need a little luck. even not like, here's the safer route, right? You don't have to try to predict these things now. Like if you're trying to predict it, take a shot with a name you like, buy some calls with time, and that's that. But I'm saying for the more aggressive play, what we would want to see is we want to see sweepers come in exactly how they were buying all these things, just like they were buying these space stocks and rare earth stocks and utility names. And then sweepers are going to swarm to where the momentum starts. If there's momentum there, sweepers are going to be all over these things. You know, just like the rare earth names, they're going to be all over them, and fairly early when they're just starting to show momentum, even earlier than that. So that's the confirmation we would want to see that, okay, now is the time. You understand? That's our confirmation, the sweeper activity. We just, again, this is not, I'm being honest with you guys, this is not something I just started talking about. And it's going to show. I've been talking about this, as you guys know, for a while, and it hasn't taken hold yet. You know, even the small caps, right? Like, you guys know, I was really bullish on the small caps. I still am. And the small caps have done well. They're a new house, but it really hasn't taken fold yet. That thesis. It hasn't even started. You know, so we see like, you mentioned uranium. Like, I remember when they were tattooing the CCJ. Those of you in the steam room know. You're talking about years ago now. Years ago. You know? So sweepers are going to be there. It's just sometimes they don't show up when you want them to show up. You know? And that could mean that they're just not ready yet as for what we're talking about. You know? Could be just rotation into them more like we normally see. But the CCJ, I had no idea, even as the sweepers are tattooing this thing, even as I'm trying to figure out and see stories. Is it tied to nukes? Is it this? Is it that? I have no idea what's going on. But meanwhile, they were all over this. Right? Even these guys, there are people buying these stocks now still. This thing was single digits. You know, all these things. UEC. To me, these were all like lotto plays that were catching sweeper activity. So the sweeper activity shows up when they're ready to do their thing. You know, again, that's the confirmation we want to see. Without that confirmation, you could be really early. And that may be okay. You know what I mean? If you're okay with it, you're okay. But to me, like, the sweeper activity is the confirmation, the timing, right? Somebody mentioned the timing is always the toughest part. It's the truth. That's where sweepers help me a lot, is the timing. You know? That's where they help me a lot. That's the edge in the timing. Look at steel and aluminum. Yeah. I mean, we were talking about this name, Alcoa, right? Has seen an uptick in flow recently. Some people think aluminum could be there. Again, these are the well-known so-called leaders of these groups. You know, more CENX is more of kind of maybe underbelly, right? That's more of my speed. I like the names that aren't as widely known and widely held, because when institutions start buying these things, there are no sellers. You know, there are no sellers. Nobody's in them. Nobody. If anything, you're catching shorts in these things. Nobody's long. You know, where Freeport, yeah, that thing is a more active stock, right? Anybody who wants copper exposure and equities owns a Freeport funds and stuff like that. So the move is never cleaner. It's always a rough trip. So I kind of like again, they don't have to be micro cap garbage, just the underbelly, the lesser known names. But again, I agree with you. Like, these would work. I'm not saying they won't work. You know, if that happens, these are going to work. All these names you guys are talking about, they're all going to work if that happens. Yeah, you know, again, I'm a little uneasy with this, you, Amy. You know, just because of this, Super Gal. You understand, these type of names, they spook me right now. They spook me. Like, look what happened here, guys. Do you see what happened here? Okay, 2 weeks ago when we had this conversation, this thing was $20, and you guys know this name well. Those of you in the steam room, it's caught really nice flow, insider buying. We know this name. This was a big winner. Many of you made a killing in this name. So it's nothing personal against the name. But the stock went from 2 to 20 in a blow-off move. Okay? It's 8 now. Like, think about people who are buying this thing at 16, 17, 18, 19. It's at 8 a week later. That's not, at least for me. I look at this thing differently, maybe. I don't know. This is not the type of risk I'm looking to put on. You know? And that's just in general. Like, that's how, like, even these crazy high flyers, I'm not a big fan on. You know, a stock that can move $100 up or down doesn't do it for me. Like, I feel like I got to get lucky. All right, it's either going to go up 100 or down 100. Like, if I make money, I feel like I just got lucky. Like, what I like is, like, for this example, a stock that has been dead at $4 for months. Now it's catching some sweeper activity. And the upside is this. The downside is what? It does more of the same and does nothing. You lose 50 cents. You get hit over the head, you lose $1. You know what I mean? So your upside is this. Your downside is minimal compared to it. You know? Now here, like, I don't know. I just don't know. You know? I don't know. Like, it's got nothing to do with the company. I don't know. This spooks me here. You know? Because you got band holders here now. So what I think has to happen is enough time's got to go by where it kind of chops around and wears everybody out. No one looks at it anymore. And then a couple months down the line, it starts working its way back. Otherwise, like, I have no feel here at all. Now, maybe, I don't know, Super Guy, maybe you're looking for a trade back to 10, 12. Well, it could do that like this, you know? But that's just not my game. I'm being honest with you. I don't know. You know? I don't know. This can easily go to $12, $13, and it means nothing big picture wise. You understand? It could be on the way to 0 and do that. But once this happens, Stupid Gal, once this erupts and explodes, that's kind of where I kind of like put my hands up, okay, and I move on to the next one. Because this becomes the risk here, you know? This becomes the risk. But again, I'm just being honest. I don't know anything about this company. I don't know anything. I have nothing against the company, right? I don't know anything about them. Anything. I don't even know what they do. I'm just talking strictly from where this thing caught sweeper buying and what happened to it after. You know? Maybe it goes back to new highs. I have no idea. Like, look at this. Sahil knows his name well, obviously. I felt the same way about this here. Okay, just to give you an idea. Yeah. Aklo. Okay? Doesn't it look a little similar? Oklo did this. Right? Went from 16 to 60. And then in a few weeks, went from 60 to 20. Okay? So, like, here, I don't know. I have no idea. Can Oklo bounce from 20 to 30? Sure, it could. You know, why couldn't it? I have no idea. But like I explained to you about the UAMI, you see what Oklo did here now? You see how it came down, kind of went dead for 2 months, almost 3 months, and then started to work itself out. Like, usually that's how it goes when they go blow off, correct, and then get hot again. But it's not a guarantee that this happens. A lot of them go right back down to zero. They go back down to peanuts. Again, 2021. Okay. So if we're in spring of 2021, what these things are going to do, I'll show you in UAMI terms. And I'm not trying to spook you. Okay. Because again, I'm not smart enough to know. But if this is 2021, okay, UAMI is going to do exactly this. Bounce, and then come down, flat line, and then leak. That's what happens when these things make a major top, a major high, like in 2021. You know, do I think that's going to happen? Again, if you had the ability to tell me what things are going to look like in a few months, I can have an educated guess. But right now, right, what does liquidity look like? Is liquidity down here or is liquidity up here? You understand? There's so many things involved with these speculative names. Later, Kate. So, yeah, I'm not trying to overcomplicate it, Subagal. That's why it becomes so difficult after they hatch for me. You know, there's nothing better about this entry here. This is the sweet spot, right? When it first starts to get sweeper activity, and it's early in that cycle, right? When they first, again, they're all starting to come to life. They didn't all blow off. They all are starting to hatch. But once that egg hatches, it creates problems. You know, because everybody looks back, always looks in reverse in time. Right? And they see this, they're like, oh man, if this could happen again. But, you know, the game is not that easy, unfortunately. Hockey sticks. So you know exactly, right? They turn into hockey sticks sometimes, right? But I want to make sure I'm being like, I really don't know. That I think the tough part. I don't know. If I felt good about either scenario, it would make it easier. I really don't know. You know, I really don't know. And I don't think like what it does over the next month is going to help us any. Because like I said, it wouldn't shock me this thing bounces from here to $11, $12, even if it's going to zero. Like that's not going to tell me anything. You know, that's not going to tell me anything. Like even the bigger names, like again, I think Irene is different maybe because fundamentally, but you know, I put them all in the speculative camp. All right, so like Irene, you got this going on now. All right, so it likely does something like this, Irene. And it trades in a tighter range. Volume volume starts to dry up. But how's that resolved? Right? A lot of people are going to say, oh, yeah, bull flag is going to new highs. Yeah, all right, bull flag all the way up here. If you were talking about a bull flag down here, I get it. But a bull flag off a parabolic move on the upside, that's a different ball game. Irene earnings next week, yeah. And as far as I see, their numbers are decent. You know, like they actually have revenue. They actually make money. So, you could, if they have a good report or whatever, you could see like a BE, right, where it pops the highs out of that. Because look, that's what you were kind of going to get at a BE in a sense, and you got earnings. But again, like this doesn't tell me anything. This could easily still do this. It's just earnings got in the way. It's tough, guys. It's tough. I'm telling you, it's these become really tricky up here. Really tricky, really dangerous. The majority of people I know, because again, I've been trading these type of names a lot of my career. The people I know who trade names after they hatch successfully, the way they trade them, I mean, they're a lot better traders than I am. I'm not afraid to admit it. Like, they'll trade this. They'll trade in here. So, like, what they'll look for is they'll look for, like, some sweeper activity to show up here. Right? So the stock comes down here. It looks like it's going to roll over, and they'll buy it for a bounce back into it. So they'll trade in this range. But that's what they do. They strictly trade it like that. And it tightens things up, But they're a lot tougher, man. They're a lot tougher. But let's see, right? Let's see as we come out of this earnings season, what things look like on the liquidity front. You know what I mean? Hopefully this is not a 2021 type of top, and maybe some digestion. Maybe we start to see smaller cap names break out in different groups. That's a possibility. While these digest, there's a lot of ways this can go. We don't have enough information yet. That's the problem. Nokia, I don't know. This name is, What is going on with Nokia? Is it the same Nokia? Invest-wise, is this the same Nokia that it's always been? Oh, I guess so. Yeah, right? $40 billion market cap, got investment from NVIDIA. Yeah, I don't know. It's an ADR, I don't know much about it. And you're chasing here, obviously. But maybe if it kind of consolidates, if you like it, I don't know much about it. I know Nokia of the old. That's what I mean. This is not speculative micro cap. Nokia, where are they from? Switzerland or something? Wow, really? I heard it in the news, but I didn't really pay attention to it. So I wouldn't necessarily put Nokia in the camp with the other names. You're talking about zero revenue names. Nokia, was a big company somewhere, wasn't it? You know what I mean? It could be something like this. Or even better, this. Vodafone. right? Finland, that's her from Finland. Wait, Vodafone can't be $90. Oh, wait, I pulled up the wrong stock. Here we go. See, like this is the Vodafone ADR. So maybe, you know what I mean? Nokia is more like this, I would say. You know, maybe businesses are turning over there. I don't, you know, or maybe a just benefit of being an overseas stock, you know, because a lot of these overseas names have been acting better. So I wouldn't put it in the camp of, you know what I was thinking about when you said Nokia this? That's what I was thinking of. Nokia, I got them confused. BlackBerry. That was the one I thought when you give me Nokia. But yeah, I wouldn't put Nokia, like if you like it, what I would say is, you know, you want to see a little consolidation here or a little come in a little bit just because of how much it's moved. But longer term, you know, who am I to say this thing can't trade higher? You know, could be a turnaround play. But I wouldn't put it in the camp that the UAME and stuff like that, you know. What else? Anybody have KRE? Yeah. So who's that? Cash is mentioning that the KRE has kind of been weighing on IWM. You know, these are supposed to benefit from the Fed cutting rates, right? I mean, the Fed is supposedly cutting rates. These things were going to be bought and help the small caps. It hasn't happened yet. You know, it hasn't happened yet. You know, I think the market's telling us possibly that the Fed is a little too slow here. Possibly. Like the liquidity guys I follow say that the Fed's going to need to do something eventually. You know, they're talking about ending QT. That's not enough. Eventually, there's going to be something that's needed. It just may not be right now. But a lot of these rate cut sensitive names haven't been acting spectacularly. But I agree. If this thing could get going, it would help IWM bigly. Yeah, Howell's saying they will need to step in soon. Yeah, you know, and Howell I got respect for. Like, you know, he knows a lot more about it than I do. That's more important, you know. So, and you know, to Howell, kind of the points Howell's making, you're seeing it. You know, you're just not seeing it as dramatic. You're seeing it like you're seeing it in Bitcoin. Right? You're seeing it in certain areas here. And maybe that cash is what ends up propelling things into 2026. Sahil, can you imagine another QE type program has to be implemented into 2026? Can you imagine? We might end up the Weimar Republic. With another round of QE. But yeah, that's what Howell's calling for. Said Bitcoin is one tech. Howell says BTC is 1/3 tech stock, 2/3 commodity. Yes. I agree with that. We are already in an easing cycle now. Financial conditions haven't been too restrictive for a while, to say the least. Yeah, you know, again, this is not my expertise, so I really can't have the type of discussion I would like to have with you guys in regards to liquidity and the Fed. I'm not going to pretend like others I know what the hell I'm talking about. But I get it. Like with financial conditions as easy as they've been, with areas of equities bubbling up, you wouldn't even think rate cuts would be a topic of conversation. But there are other areas of the economy that are having issues. Now, again, I don't know if rate cuts or something the Fed has to do other than rate cuts is going to help the matter, but that's kind of the argument out there. You know, me, as long as I've been around, I've never, with a market ripping at new highs, with speculative names ripping all over the place, and the Fed's talking about cutting rates, I would never have foreseen that in my wildest imagination. You know? Again, right, if I remember correctly, right, the Fed, I mean, they were trying to slow things down into the top of 2000, the tech bubble. Matter of fact, I think they were raising rates. Yeah, it's wacky. We're in crazy times, you know? Yeah, I don't know, Sahil. That's what Cash is talking about with Howell. That's from what's his face? I forgot the name of his company. Cross Border or something like that, the liquidity guy. But yeah, he's talking about, he mentioned, I know, because I subscribe to his stuff, he don't think stopping QT will be enough to solve this liquidity problem. Shortage, or however they phrase it. Yes. So I don't know, but I don't know the details. No, but he knows his, he knows his shit. So it's worth paying attention to. Doesn't, in my opinion, you don't act on these things, in my opinion, but you watch out for these things. You watch out for these things. And if you trade these speculative areas of the market, you got to be aware of these things because they affect them significantly. Powell said yesterday they will have to maintain the balance sheet. Yeah. I heard him yesterday. I heard him. Yeah. Yep. But yeah, and that's the cherry on top is the government is shut down here now. The market hasn't seemed to care yet. So again, you put all these things we're talking about tonight under one roof, and it just tells you to be smart about things. If you haven't noticed it in the price action yet, you're just noticing QCOM gapping up on news, the same AI news getting recycled. If you're just noticing that, hopefully when you come to this webinar, I bring to your attention everything else that's going on. But there are risks out there. There's a lot of risk out there in individual names right now to be careful of. And, let's see how it shakes out. Let's see how it shakes out. As we hopefully, and we have a shot at this, as we're coming out of earnings season, as the sweeper activity is clearing up, a lot of this stuff we should start seeing answers to. So fingers crossed, it might line up perfectly, It might line up perfectly. Yeah, maybe in the interim we get a rinse for a week. I'll take it. I'll take it. So, but just again, if you're trading right now, you can't be trading the same way you were a month ago. You got to be a lot more careful and a lot more aware of the risk out there right now, so you don't get lumped up. All right, BlackBerry. See, you're bringing me back. I'm reminiscing. Nokia, BlackBerry. You got me tech bubble days. That's back in the Cisco research in motion. I'm back in the go-go days of the 90s. All right, everybody. I'm going to wrap it up. I'm about out of voice here anyway. But I appreciate everybody coming by, talking shop, per usual on a Thursday. For those of you in the steam room, I'll see you bright and early mañana. Tomorrow's Friday already. The rest of you, I'll see you guys next week. Enjoy the weekend, and we'll talk soon, all right? Enjoy the rest of your night, everybody.